Welcome to an introduction to ProAct Trader's charting software. First of all, if you're out there looking for the holy grail of Forex, it can't be found. It's not there. If you're looking for a black box, this is not it. So we'll just jump right in here. First of all, what makes us different? Well, first of all, we have harmony. We use multiple time compressions to tell us what the market is trying to do. And then we capture momentum. We capture the market movers as they are making their trades. We have 4 trade setups built into our templates. And we have 3 tools available nowhere else. These are an HSI tool. It's a tool for finding the big boys targets. We have a PAT projector. We use that to find the pulse of the current session move. And then we have something called T30s, which are 30 pip targets, and they're displayed automatically on the charts. Now, we also have free training and a free trading room. So let's take a look at each one of these. Harmony, first of all, is one of the keys to trading. We use multiple time compressions. We don't just rely on a 5-minute chart or a 10-minute chart or a 15 or whatever. Now, the big boys trade on the 60-minute and higher. Little guys trade on the 3, the 5, the 10, the 15, and maybe even as high as the 30. Now, who normally wins? The big boys. So we created charts using the big boys information pushed down to the little guys trading area. Now, momentum. Momentum relates to speed. Is the market moving? Are the big boys moving the market? If the big boys are moving the market, we show it. Who normally wins? The big boys. So we created charts using the big boys information pushed down to the little guys trading arena. So here's how we do it. First thing, we have to determine if we are trending, ranging, or are we reversing. Now, how do we know? We define the area between the moving averages on our charts as the desert. We have very special moving averages. They don't correlate to standard moving averages on purpose. Now, if you're moving away from the desert, the market is trying to trend. If you're moving into the desert, the market is either ranging or possibly reversing. So here's a start chart. This is a wildcard chart, and this is the area we define as the desert. It's the space between these moving averages on the top and these moving averages on the bottom. Alright, so here we have a big desert area, but over here on the right we have a very small desert area. And you can see over here on the left that the market was reversing, and there's a great trade down through there in through the desert. Now over here on the right hand side we see that we are moving away from the desert, which means the market is trying to trend. Okay? And you can see that very clearly once you put a trend line on there. So let's just take a look at each one of our trade setups. The wild card is a trending trade setup. So here we have harmony plus momentum on the very same chart. When a currency is trending, we don't need the confirmation that we would need in a ranging or a reversing market. So the first thing we look at, back to that, sorry. First thing we look at is moving averages and all these dots. And the dots will tell us something very, very important in a minute. You'll also see we have arrows and painted candles. Now this is not a black box system, so it's not like that's a trade. The arrow tells us money has entered the market in this direction, and it's strong enough to turn the candle into bright green. Or conversely, coming down, an arrow tells us money is entered, and it's strong enough to move the market bright red. You see the candles before were dark red. Okay, they're not neon colored, and that's a big difference. Here's a 6 aces trade setup. It's used when we're ranging or we're reversing. Now here it's much more dangerous, so we need more confirmation. And you can see in the middle we have something we call PAT O's. They're an oscillator. We invented them. They're not a standard oscillator out there. And these give us additional confirmation that the market is trying to move in the direction that it's trying to go when the market is ranging or reversing, where we need lots of confirmation to go counter trend. You'll see these little red boxes here called HMIs. They stand for horizontal momentum indicators, and they tell us whether there's any gas in the tank. Are the big boys actually moving the market? So when the market is trending and moving pretty strongly up with lots of momentum, if you're going up, you'll have at least one green one. If you have two green ones, you have considerable momentum. Going down, as you see over here, it will be red, just the opposite. And black is a neutral color. That means the market's fairly stagnant. So it's a very quick visual way to tell us whether there's any speed in the marketplace. Then we have a royal flush trade set up. A royal flush for us is a swing trade. It's also known as an Elliott wave, but you don't need to learn Elliott wave. Alright, so here what we have in the center up here, we have a wild card, okay, a momentum trade trading away from the desert, okay, and then over on the right we have those PATOs and HMIs. Now here you get an HMI and a PATO for every time frame, so you can see if there's harmony and speed occurring, alright, telling you whether this market or this current move is potentially sustainable. We'll take a look at each one of these separately. So let's take a look first at the wild card. Here are the rules, and by the way, we are rules based. It is black and white. There is no gray area. So we only trade in the direction of a valid 60-minute wild card. Now how do we know what that is? Well, when momentum enters on the 60-minute chart, we put a white dot on the 10-minute chart, and it tells us that the big boys have entered at their level, the 60-minute or higher. And basically what it does is it gives us the ability to trade momentum. We trade only when the 60-minute wildcard dot is pointing away from the desert. In other words, if we're going up, the dot has to be on the bottom, telling us we're going away from the moving averages up. If the dot is pointing into the desert, then we know immediately we have to go to a 6 aces. Okay. Now, we also have the dot gives us permission to find a wildcard trade on the 10-minute chart. We will look for entries when we have momentum on the 10-minute chart. That's at a level where we can trade it, and most importantly, we can put proper stops and limits for ourselves. So what do we need? After we have the dot, we need an arrow. That tells us money is entering in the direction that we want it to go. Then we need a painted candle. The painted candle tells us there's so much money coming in, it has the ability to turn a candle from a regular old dull green one into a bright green one. It tells us there's speed in the marketplace. Then we have to have both of the sets of moving averages, there are two sets of them there, going away from the desert. Green is going up, red is going down. We trade to a T30. I'll talk about them more a little later. And then we move our stops. We try and stay in until the HSI target has been hit. Again, I'll tell you a little bit more about the HSI in just a minute. So let's take a look over here at this wildcard trade setup. Okay, first thing we look for is this moving average. This big red moving average is actually approximating the trend on a 240 chart. Okay, it also defines the lower part of the desert. The upper part of the desert is the highest moving average. You'll see there are little green moving averages in here, and you'll see a thick one. Okay, now when the chart is moving away from the desert, right there is the desert. We now know that we have a market that is trying to trend. What we need is the big boys to come in the market. Now that is shown to us by this little white dot. When the white dot shows up, it tells us that the big boys have entered at the 60-minute or higher. So now we have permission to find a trade at our level. Okay, what we need is money coming in at our level. Well, that occurs at that little arrow right there, and it's strong enough to turn the candle from this dark green one. You see the green one before, it was a good move, but it didn't have momentum in it. It had price movement, but not momentum. All right. Momentum enters on the second candle right here, and that's our entry, and of course it goes up about 200 pips. So it's a very simple wildcard trade, and that's how it's traded, folks. There's no gray area about it. That's it. Now let's take a look at the 6 aces. Okay. Now we move to the 6 aces when the wild card is pointing us into the desert, or we open up our charts and we're already in between those moving averages. Okay, so the wild card would be telling you we have a dot and the movement is headed into the desert. So the desert is the space between the two sets of moving averages. So we trade when we have all the charts saying the same thing. black and green or black and red. Black and green means the market is trying to go up. Black or red means the market is going down.